It is now my delight to introduce our second lesson from practice. I have the pleasure of introducing Jackie VanderBrug, who is Managing Director at Bank of America and has been leading the Women and Girls Equality strategy there amongst many other initiatives around social impact, and has seen firsthand what it takes to invest with a gender lens and to get an organization to really rally behind that. She's also a dear friend and compatriot in the fight, and so I couldn't be more thrilled to introduce her to come up and speak with us today. So thank you, Jackie.
Thank you so much, Sarah, and my thanks to all who have spoken today. It's been fantastic, and I feel like the synapses in my brain are kind of imploding a little bit in a good way, so we'll see where it continues. I want to start with a bit of a story. So in 2005, I was part of raising an investment fund, which was one of the early impact investing funds. And I also had been working around the world with women philanthropists through women's funds. And I found that these were very separate groups. And what we were trying to do was say, how could we get some of the women who had been philanthropists to bring their expertise and to have seats of power at the emerging impact investing space, because it was mostly men. And we actually had to ask ourselves a question, because my partner and I had our list of LPs for the fund, and we realized that it was 90% men. So our own bias, even though we had been working with women philanthropists, was that they were philanthropists and that they wouldn't be investors. But when we started talking to them about it, they asked us a question we couldn't answer, which was, what will the impact of your investments be on women and girls? We didn't have an answer. And so that led us to a whole conversation and mapping the field for what were investments that had a gender lens, and we found very few. And more than that, we had a problem, because when we talked to investors who were investing in poverty, like some of the early impact investors, and traditional investors in large banks, they all said, first of all, you can't do that. You don't have any data. Secondly, if you did do it, you'd lose money. And third, even if you didn't lose money, it wouldn't make a difference. So there was not a lot of momentum behind this. And one of the things that we had to do first was say, what was it? And this is where Sarah was just hugely influential in the development of the gender lens investing field, because to define something as a field, we needed some academic rigor and some folks to come in and work with us. So one of the early pieces that Sarah and I worked on in the Stanford Social Innovation Review really helped to refine what people thought. Because the initial belief, as soon as you said gender lens, was that you were taking half of the population off the table, right? That this was a limiting view. And what we had to do was to shift a gender lens from a limit to actually a lens. And those of you that do this work, you're like, of course it's a lens. It helps you see things. In the financial world, it was absolutely, and it still is, seen as a limitation, right? You have just constricted your investment space. And so I regularly go around and take my glasses off and say, without my glasses, you all just got really fuzzy. With my glasses, I can see things better. I'm going to see risks. I'm going to see opportunities. We also had to get clearer about, well, so that's great. You can now see the realities and the needs and the leadership of women and of men, and this is going to make you better investors, but so really, what does that mean? And so we came up with these three particular lenses. Again, they are not exhaustive and they are not silos, but it was helpful to give some examples. And so the first is access to capital. Not surprisingly, if you think about a female entrepreneur, whether you have a micro entrepreneur in Toronto, or you have a high growth entrepreneur in Toronto, or you have a film director in LA, or you have a fund manager in New York, that woman has less access to capital. We talk about it as capital punishment. And the thing is that we've seen huge gaps. So these are McKinsey numbers. I'm sorry, these are World Bank numbers, 2015, so they're slightly outdated, but $320 billion gap in terms of SMEs who have small and medium enterprises who have a woman in their founding team looking for capital. So there's been a lot of work by the World Bank and by other development finance institutions to start to move capital in that way. And one of the behavioral tools is ring fencing, right? So I was in Japan with the International Finance Corporation in 2014 talking about a new gender bond. And there have been others since then, and there are more coming. So, but with that, there's a lot of training and other things going on. The other thing that, I don't know, how many of you saw All Raise? Because what we know is that persistently, women have gotten 6 to 7% of venture capital. If you want to talk about women of color, in the year that I wrote a book on gender lens investing, 12 women of color raised more than $1 million in the US, 12. So the numbers are, you know, in the percentage points there. So what we have here is a set of women saying, we are looking to say, in a number of years, I can't remember, I think it's 2025, that 1/4 of all venture deals in the US will have at least a woman on the founding team. And that's an aspirational goal that they're working together, and there's a lot of behavioral interventions in terms of networks and changing the process for review of a deal and a set of other things. And the goal, let's just be clear, is that we have 75% of the money going to all male teams. But it's not just about women entrepreneurs. The next lens here that we use is workplace equality, or think of a value chain of a company. So think from the board all the way through and into the supply chain, and ask that question of, are you getting everything that you can inclusively from that chain? And so we get to questions, again, of not just counting, but valuing. Although, as financial folks, we count a lot, and so this is McKinsey data, counting in terms of companies that have more women in leadership. And again, they found 21% more likely of those companies to deliver financial returns above industry means. Now, I could have given you an entire presentation on the outperformance that has been found in terms of gender lens, and we're starting to see that picked apart in different ways and put back together in different ways. Our quantitative analyst at Bank of America wrote a piece recently called Women the X Factor, and what she found is if you look at women on boards, women in leadership, and progressive, inclusive policies, that those companies have lower price and earnings volatility going forward. That's important to investors. So you could put these pieces together how you want. Part of it goes back to the research around inclusion and better decision making at all levels. And I like the research that talks about, for instance, all male teams on oil rigs, and saying what happens there and what happens when you don't have diversity in terms of safety issues and things like that. Wall Street is waking up. It's still very small. These are numbers from 2 years ago and last year in terms of what we call gender mandate strategies, which are those that actually have a hypothesis that some sort of deliberate integration of gender-based data is going to make a difference in terms of long-term performance. And so I think you'll see that number come out. The gender mandate number comes out from Wharton this month. It's probably going to double. The gender overall integration numbers comes out from SIF. That comes out later this month as well. My prediction is that is also going to double because there's a set of new instruments that have been out there that are quite interesting. The third lens is, so we talked about who gets access to capital. We talked about the value chain and how inclusive it is. The question of what does the company do, right? And if they are wildly successful, will those products and services drive greater gender equality? What does that look like? And so you can think, the story that I sometimes say is, when do you think we started to mandate the use of female crash test dummies in the driver's seat in the US? 2011. So this aspect of how do you include gender data and that the male consumer is not the norm. Why was the Apple Watch launched without a menstrual calendar? I don't think there were a lot of men on that team. There's a set of things in terms of just overall integration into the design process. But there also are a set of gender gaps that create huge economic opportunities. So this is BNY Mellon data, where they went through and said, look, if you look at gaps in water, if you look at gaps in healthcare, if you look at gaps in telecom, and you design products deliberately focused around bringing women into the economic mainstream, there is a huge opportunity. And so we're seeing a lot more funds that are coming out specifically focused on, say, products in emerging markets targeted towards girls. And they may be educational products, they may be soap operas, as was mentioned in a previous panel. There's a set of other things that are emerging, but investors saying, wait, this is both good for the planet, and sometimes now the benefit of the SDGs and the SDG 5, but also how SDG 5 is integrated throughout the other SDGs, being able to tag that and say, here's what we're looking at and why. So specifically, if I give an example from Bank of America's perspective, and I work in our wealth management group, our product, financial services, has not traditionally worked all that well for women or been marketed all that well to women. And so we look at this and we say, wait a second, women are increasingly wealthy, and they are, and I have to be really clear because I'm talking at super high levels. I am the person in our organization who was saying you cannot say all women. We need to look at women, very differently. On the other hand, when we do say all women, wealthy women will say their most important goal is hitting their most important priority is hitting their goals. You think, oh, of course, everyone's priority is that, right? Except that men's most important priority is beating the market. So they look at investing differently. Women are disproportionately interested in the impact of their investments. So a third of women are saying, I would like to make an investment that has both financial returns and positive social environmental impact. And I have not yet done that. So they're in that aspirational gap. Please, someone help me do this. That's significantly higher than men, although men are catching up. So this is historically an area where women have led. They also want to do that for a different reason. So when we research and we say, why do women want to make an impact investment? The top reason for them is they have some kind of issue that they feel very strongly about. They feel strongly about women entrepreneurs. They feel strongly about women and water, women and education, or just broadly the environment, whatever it is. Men are more likely to say, they also feel strongly about issues, but they are more likely to say, this is a risk issue. I see these companies as having lower risk or higher economic drivers. So it's a matter of how we talk about this. Women are not interested in the performance of their investments. They just don't want that to be tied separately from the rest of what it means for the world. We did some research in the US recently, and the top regret that women have is not investing more. So part of the process is to say, what are the behavioral levers to enable women to feel confident in their investments, and then to go ahead and make that. I believe that 20 years from now, we will see a lot of women saying, my top regret was that I knew what I wanted to invest in, and I didn't. And those were actually huge opportunities, given what has happened in the market in terms of the transition to a sustainable economy, the lower carbon economy, and so forth. There's a full spectrum. We talk about it from, groups that will avoid certain things. So maybe I want to avoid companies that don't have a woman on their board. Or sustainable, I'm looking for companies that are excelling in certain areas. Thematic, might be a healthcare fund. It might be a fund that invests in low-income housing, which is disproportionately benefiting women who are disproportionately low income. So different ways of doing that. What is most important at some level, and I'll sort of leave it here, is that the processes, or the vehicles are really getting more robust. So you can see in Japan, the pension fund moving $10 billion to a new index that is focused around companies in Japan that are employing more women. Because that is both a country policy, Abenomics and so forth, we need to move in that space. And they're saying, wait, we think that this is going to lead to better performance given the other data. But you're also seeing very small opportunities. In Canada, there's one woman who I think is here, Vicky here? Vicky Saunders, CEO, right? Smaller debt-based investments in women entrepreneurs. So all different kinds of instruments at different levels for different parts of the spectrum as we move forward. And then, my question is, what are all the behavioral incentives? Because getting investors, whether they are individual investors who are making that first investment, whether it's for their 401k or their first $5,000, or institutional investors to change their habits, is real work. So, thank you.
Thank you very much, Jackie, especially now that I see you're actually wearing a boot. You has a foot injury. Thank you very much for that, and we're going to